Hello traders! In this video, we will have a look at everything you need to know about risk management. It goes without saying that risk management is the most important part of trading. Although most traders think that they are losing money in trading because of flaws in the trading strategy, the truth is that in most cases, they are not using the proper risk management. Proper risk management in trading is what separates it from gambling. Even though we can never be sure of what markets will do next, we can cover our potential losses and aim for wins that will make us profitable in the long run by using proper risk management. The first and the biggest problem of bad risk management is undercapitalization, because a lot of brokerage firms offers deposits as small as $50. A lot of traders come into trading with $1,000 and think that they can double or triple their capital very quickly. This leads to opening too big of position where a short losing streak can cost you a whole trading account. We at FTMO know this, and that's why we provide traders initial balance of up to $200,000. This way, you can keep your risk per trade very small and still achieve significant gains. How much should you be risking per one trade? In most books and in educational courses, you will find out that you should not be risking more than 2% per one trade. Although the answer to this is more complicated, let's start with saying that 2% risk per trade is a good base to begin with. As you can see from this chart, keeping your risk at 2% per trade would only cost you approximately 20% of your account on 10 consecutive losses, which should not happen in the first place for traders with a robust trading strategy. But if you would decide to risk 10% per trade, you would be down over 60%. And that's a deep hole to dig yourself out of. As you can see right here, here are the percentage required to go back to break even. Making 25% of your account back is not easy, but it is still doable compared to the 150% required to break even after a 60% drawdown. Because there are no two traders with the same trading style, risk should differ based on strategy. If you are a scalper or day trader who takes 5 trades every single day, should you be risking 2% per trade? Absolutely not. With this amount of trades, risking 2% is simply too much, as you can quickly experience large drawdowns. Day traders and scalpers usually risk only 0.5 to 1% per trade. On the other hand, if you are a swing trader who only takes 1 to 2 trades per week, the 2% risk might be too small. If you know that the next trade will come up in a few days, you can probably bump your risk a little. But don't go too crazy. In general, your risk per trade should not exceed 5%. An exception to this will only be if you are taking a long-term investment. We all hate them, but the truth is that they are inevitable in trading and we must be well prepared for them. As you can see on this table, if you have a trading strategy with a 60% probability win rate, there is still a 70% chance that you will get 4 consecutive losses in a row. But things can be even more drastic if you are a trader with a 40% win rate. There is over 50% chance that you will have 8 consecutive losses in a row. Does that mean that you are not profitable? Absolutely not. As you can see from our equity simulator, there is no single occasion from 50 different simulations that you would end up with a negative balance after 100 trades. From all the projected simulations, the highest number of consecutive losses could be 12. And this brings an important question you should ask yourself. Are you able to sustain 12 losses in a row? This is something you have to take into consideration when you are building your trade plan. It is not an easy process, but you will know exactly what to expect from your trading strategy once you are done with it. The last piece of the puzzle is the reward-risk ratio. The reward-risk ratio simply tells you how much you win compared to your risk. If you are taking the trade with a 3-to-1 reward-to-risk ratio, it means that for every $100 of your risk, you have the potential reward of $300. The chart shows the sequence of 10 trades with a 50% of win rate and random distribution of wins and losses. As you can see, although you have only won 50% of the times, you still ended up with $100,000 gain. Things are not always that easy in real trading, as you might not get a fixed 3-to-1 reward-risk ratio for every trade. In general, taking trades under the 1-to-1 reward-to-risk ratio can be quite tricky, as you are essentially losing more than you are winning. Because of that, you need to compensate for it with a very high win rate. Another important factor with your reward-risk ratio, which you have to realize, is how you manage your trades. If you are taking a trade with 2-to-1 reward-risk ratio, but you decide to close half of your position once you are at 1 hour profit, and then close the rest at 2 hour, your win is only 1.5 hour instead of 2. In practice, you take a trade with $200 risk and potential $400 gain. At $200 unrealized P&L, you close half of your position, which is 100. The rest of your position is closed at that 2-hour target, but instead of 400, it is only 200. As you can see, you have won $300 instead of 400, which is a reward-risk ratio of 1.5 instead of 2. This scaling out of your trades can turn against you once you hit a streak of consecutive losses, as your prior wins were not that significant. The last thing in the risk category are the risks that few traders think about. These are risks that you really do not expect to happen, but they still can occur. Unexpected news releases, gap risk with holding position during the market close, internet cutting down in the middle of the trade, and other factors can come to you at any time of the trading day. You should always be prepared for them and have a plan for what to do once they happen. Alright traders, this is it for this video. I hope you have enjoyed this. And if you have any question, or you are struggling with something, or are just interested in something, just let your comment down below. Please don't forget to subscribe to our YouTube channel, and I wish you steady study and see you next time.